You can join via YouTube. You can join via YouTube. I'm already live. I am live. So I'm saying basically today we are looking at the statement of financial position, which is commonly known as the balance sheet, Okay, so the traditional name for the statement of financial is the balance sheet. You can maybe in years to come, maybe the word the balance sheet might be forgotten, but that is what it used to be referred to before. But now it is the statement of financial position. People still use the balance sheet, okay? But as per IAS and IFRS, we call it the statement of financial position. So what is basically this the balance sheet? What is this we call the balance sheet? Okay, the balance sheet is basically a report. It is one of the main financial statement. Okay, actually the most common financial statement. And because we usually have the balance sheet, that is the statement of financial position, the statement of profit or loss, the statement of changes in equity, the statement of cash flows. Okay, so the first one is usually the statement of financial position, which is the balance sheet. Okay, so for the balance sheet, it is able to show us the assets in a business, the liabilities, and equity as at a given point in time. Okay, as at a given point in time. As at a given point in time, we are able, so we are saying as at 31st December 2025, for instance, we are able to see that this is the assets in the business, these are the liabilities in the business, and this is the equity in the business. And we are talking about as at a given point, not a period, as at a given point or particular point in time. What do we mean by that? When you look at, for example, in your or your house or your personal things, you're able to know these are the assets I have as at this particular point. You could be having like these headphones, or you could be having your laptop or your chair, your furniture. Okay, so we are looking at that particular point in time. What do you have? Okay, so as at a given point in time, this statement is able to show us that you have these assets, you have these liabilities, and you have this equity. Okay, so to be able to understand better what are assets, liabilities, and equity in a business, we can check the course we launched during this week. It basically defines what an asset is, what a liability is, what equity is. Okay, and you're able to classify the current and non-current assets, the current liabilities and non-current liabilities, and also the components of equity. Okay, so from that course, you're able to understand all these, the accounting equation, assets, liabilities, equity. Okay, then you will come to understand the statement of financial position. Always the assets will be equal to the liabilities plus the equity. Okay, recall the accounting equation. The accounting equation is actually states that the assets of a business are equal to the liabilities plus equity of that business. Okay, so in that, then always when you have the statement of financial position, the assets will be equal to the liabilities plus equity, because every time a transaction happens, it affects at least two accounts, and it will always leave the accounting equation balanced. Okay, so I've done previous videos on this. You can check on my bio on how the illustration of how the accounting equation works. Okay, when you join the live, like it. I'm streaming on YouTube. Like the live so that others can join. Okay, like the live. Then let us proceed. So we say the assets of a business is equals to liabilities plus equity. Okay, so that is one of the main things you should be able to understand when you're looking at the statement of financial position. And when you want to prepare the statement of financial position, you've gone through the whole accounting process, that is from recording the transactions as they happen, and then you go ahead and are able to come up with the trial balance. When you come up with the trial balance, you also do the period end. You do the period end adjustment. This is where you're looking at the accruals. You're looking at the prepayments. Okay, you're looking at the prepayments. And then you make these. Another one is depreciation. There is also allowance for but there is also allowance for bad debts. Okay, so these are the period end adjustments that you have to do, and then you come and make an adjusted trial balance. I can see someone is saying, where wasn't you're struggling with accounting at university. Here I am now. So once you have the trial balance, you do the period end adjustment. You're going to get the adjusted trial balance. Okay, so this trial balance now is inclusive of all those period end adjustments. Examples of period end adjustments are like accruals, prepayments, depreciation. You do the allowance for bad debts. Okay, so you need to make these adjustments as at that year end when you're doing accrual accounting. Okay, once you do that, then you will have that adjusted trial balance. I want us to look at an example here. We have been given the adjusted trial balance. Then let us look at the how to prepare the statement of financial position given that trial balance. Okay, again, I repeat for people who've joined the live, I am streaming on YouTube as well. I won't be able to share my screen here. Okay, welcome to the live. For the ones who have joined, share it with your fellow students, like it. Saying this class, we are looking at the balance sheet, that is a statement of financial position. And this is for anyone who wants to be able to understand financial statement, not only students who are studying, but also if you want to invest, you need to be able to understand financial statements of a company, especially the ones that are publicly listed. Then once you're able to understand them, you can make your choices knowing how the status, the position of this company, and also how they are performing. And today we are looking at the statement of financial position. Okay, so I'm also streaming on YouTube. So I'm also streaming on YouTube where I'm able to share my screen. Yeah, I'm not able to share my screen. So if you're here, check the link on my bio. There's a link to my YouTube account. Yes, this is the balance sheet. There's a link on my YouTube account. You will find that I'm streaming from YouTube. You can check it out. Check the live from YouTube. So I want to use this example where we've been given the adjusted the trial balance, that is an adjusted trial balance. So we are being asked now to prepare the trial balance. Remember, I said you have to do the adjustments. to the period end adjustments. Yes, Luboma, this is the balance sheet. I am live on YouTube. I'm also streaming from YouTube. You can join as well from the YouTube account. Go subscribe and join the live stream. Okay, then you'll be able to see my screen. Here you won't be on YouTube. On TikTok, I won't be able to share my screen. Okay, so let us continue with the question. We've been given the adjusted trial balance. Where we've been given the balances. Remember, the trial balance shows the balances as at a particular point in time. It shows the balances as at a particular point in time. And here we have the first one, which is cash. Basically, this is cash in bank. This is this is cash in hand. Then we have cash in bank. We have cash in bank. Okay. We have account receivables. We have account receivable. We have inventory. We have prepaid insurance, office equipment. Okay. Then we have accumulated depreciation. We have accounts payable, bank loan, which is long term, accrued expenses, and capital. Then we have retained earnings. Then we have sales revenue, cost of sales. We have cost of sales. We have salaries expenses, rent expenses, utility expenses, insurance expenses, depreciation expense. The first question you should ask yourself, where should we have any expenses and revenue in our statement of financial position? No. Okay, because these are balances over a period of time. The sales revenue account and the expense, we record the expenses that have been incurred during a particular during a particular period of time. But when you look at the assets and the liabilities in a business, when you're talking at balances, cash in hand, we are saying at this particular point, your office or in your office, you have this amount of cash, or in your bank, you have this amount of money as at that particular point, not looking at the money that you've been having through a certain period. No, we're only looking at the balances as at a particular point. Okay. We have the account receivable, that is as at that particular point. This is the account receivables you have as at that particular point. Okay. Now let us look at how we prepare the statement of financial position. Okay. So normally you have to include the name of the company, the statement, and the period, the asset that given point in time. Okay. So then when you do that, you first now classify. Remember, the statement of financial position shows the assets, liabilities, and equity. Okay. Before we, from your comments, I'm saying I am streaming live on YouTube. I'm streaming live on YouTube. So kindly join there. Kindly join from YouTube, because then you'll be able to see, what I'm showing on my screen. Okay. Where should we write the other income in profit and loss, below gross profit, or after? Okay, walls. This is the statement of profit or loss. We usually start with the revenue, then the cost of sales. Okay, you get the gross profit. Then you go to the administrative expenses. You go to the administrative expenses or the operating expenses. Before that, if you have selling and distribution expenses, you also include them. Okay. Why you can't see my screen? It's because you are on TikTok. If you want to see my screen, you have to go to the link on my bio. Go to the link on my bio. Then you're going to get to my YouTube account. I said I'll be streaming from YouTube, but I said first I'll make sure my TikTok followers are aware of that. Okay, so go to YouTube, subscribe. You're going to see there is a live stream. So on YouTube, I can share my screen. On TikTok, I can't share my screen. Okay, on TikTok, I can't share my screen, and my way of teaching is being able to show you the actual thing. Okay, so go to YouTube. There's a link on my bio. That is to my YouTube account. The YouTube account is Accounting and Finance Playbook. Subscribe and join the live stream from there. I can see we are actually increasing from this side. Yeah, kindly go there. Make sure you subscribe as well, so that you'll be seeing every time I start streaming on YouTube, you're able to see. Okay, you're able to see that I am streaming. Okay, I am streaming. So kindly go to the YouTube account. which is, there is a link on my bio. There's a link on my bio. There's a link on my bio. Let me reply here. So as others join, check YouTube account live stream. Okay. Yes. So join. So for the people who have joined here, I'm sharing my screen on my YouTube stream. On my YouTube stream. Okay. So check it there. Okay. So as I was saying, for the statement of financial position, that is the balance sheet. Okay. Basically, we have to look at 3 sections. That is the assets, the liabilities, and equity. Okay. What are assets? Assets is anything that has an economic value. It is an economic resource. Okay. It is anything that is of anything that has an economic value. That is what we call assets, and we classify them into 2: a current asset and a non-current asset. A current asset is anything that is of economic value that you can use. You can utilize it within a period of 12 months. That is 1 year. Okay, that is basically a current asset. A non-current asset, you can utilize it for more than 1 year. For example, if you buy a motor vehicle, you can use your motor vehicle for a very long time. Okay, you can use a motor vehicle for 4 years, 5 years. Okay, those are basically what we refer to as non-current assets. Again, I'm streaming live on YouTube. That is why you can't see my screen here. So check my link on my bio. There's a YouTube account. There is a YouTube account. So let us look at the first section of the statement of financial position, which is the assets. And as mentioned earlier, we need to start first with the current assets. Let's start with the current assets. Okay, the current assets, as mentioned, are those that current assets are the asset that will be utilized within a period of 1 year. And in our example here, you can see we have cash in hand, we have cash in bank. Okay, let's start by recording that one. We have cash in hand. This is cash. This is physical. Okay, other for a company that has a lot going on, they don't need to have cash in hand and cash in bank separate. They can just have cash in total. Okay, and record at once. Okay, as cash. So here we have, actually in our case, let us do it. Let us just record cash, which in this case it's 15,000 plus 35,000. Okay, that should give us 50,000. Okay, so cash balance as at 31st December 2025, the cash balance is 50,000. Okay, then we have, kindly also join the stream from YouTube so that you're able to walk with me. Okay, yeah, we'll share examples. Intangible asset, for example, those are intangible assets. Those are like patents, copyrights, okay, software, any asset that is intangible. Another place you can be able to understand more of these, check, there is a course that we launched. There's a video I did recently on where to access the course. Purchase that course. It's going at $8.9. It is going to take you through the assets. We have the liabilities, the accounting equation, the accounting cycle. Okay, so that is basically, check that course. It is going to assist you. Okay, so let us proceed. So here we have cash, it's 50,000. Then we have the account receivable. We have account receivable. Account receivable is also a current asset. So we have account receivable. We have the account receivable. Remember, an account receivable as well is a current asset. And we have here 22,000. Okay. Then we have We have inventory. Inventory as well is a current asset because this is something that you're going to utilize within a period of 12 months. So inventory here we have 48,000. Inventory we have 48,000. We have 48,000. Then we have prepaid insurance as well. Prepaid insurance, remember, any prepayments that we have is an asset till we expense it. Okay, till we expense it, prepaid insurance is a current asset. So in here, prepaid insurance we have 3,000. So this is still under current assets. Okay, so we have prepaid insurance. Okay, these are current assets. These are current assets. Now here we have up to this point, we have now office equipment. When you buy an equipment, let's say like furniture, do you buy an office equipment to use it within a period of 12 months? No, you're buying, for example, that chair so that you can use it for a period of more than 1 year. Okay, so here office equipment is a non-current asset. Office equipment is a non-current asset. Okay, so here let's start non-current asset. Maybe first let us sum total current assets. The total current assets. Remember, this classification of non-current and current assets is usually done by most companies. Some other companies are required to do it as liquidity. That is, you'll find most banks and most financial institutions are classifying the assets depending on how liquid they can become. Okay, so they are going to start still with the same, almost the same, because the cash is the easiest asset to liquidify. Okay, so them they use the liquidity way, but most companies use these current assets and then non-current assets. So we are saying our total current assets there is going to be, you're going to have 123,000. Okay, now let us look at the non-current assets we have for this example. The non-current assets we have, we can see here we have been told the office equipment. Remember, office equipment is an non-current asset, and we have an amount of 90,000. So to be able to get the actual office, the net book, remember in this case we usually record the net book value. We record the net book value of this non-current asset. So we need to deduct the accumulated depreciation. Remember, this is depreciation that has been accumulated since when we purchased this equipment. So to be able to get the net book value of this office equipment, we basically take 90,000, we less 18,000. So we are going to get the net book value, that is the net book value of this office equipment as 72,000. Okay, so here we are going to record our office equipment. We are going to have a 72,000. Okay, 72,000. And with that, we look for, do we have any other non-current assets? No. Okay, remember, assets accounts usually are recorded on the debit side, so you just have to look on the debit side and you're going to find the other things that are on the debit side is the expenses. Okay, which we do not include in the statement of financial position. These are what goes to the statement of profit or loss. Okay, so in this case, you're going to find other non-current assets are like motor vehicles, other furnitures, equipment. But in this case, this company only has office equipment. Okay, so the total non-current asset, non-current assets will be actually we only have 72,000. Okay, so let us calculate the total assets. Let us calculate the total assets themselves. Now, total assets will be the non-total current assets plus the non-current assets. So in this case, we are talking about 123,000 plus 72,000. Okay, so we're going to have a total of 195,000. Okay, so basically these are the total assets. Okay, so what now? Let us go to let us start with equity. Let us start with equity. Okay, so equity, in this case, what do we have? Remember the statement of financial position as assets, liabilities, and equity. Okay, so we've gone to the equity section. Let us look at the balances for equity accounts. You can see here, after we have account payable, this is liability. A bank loan, this is a liability. We have accrued expense, this is also a liability. Then we have capital and retained earnings. Actually, this is what we have here as equity. Okay, remember, to be able to know what is a liability, what is an asset, what is equity, you really need to understand the characteristics that make something an asset. That is why I'm able to just look at account payable and I know it is a liability, because I understand there is an obligation to pay. Same to the bank loan, same to the accrued expenses. And to assist you with that, kindly check the link on my YouTube, to this class, okay, to this lesson on that we did, to this course that we prepared, to be able to understand. You're going to understand what are assets, what are liabilities, what is equity. The course is going at 8.99. You just need to click buy now, add the details of your purchase, okay, and you'll be able to have these pre-recorded videos that we're going to introduce you to financial accounting, how the accounting equation works and illustration, what is the assets, liabilities, equity, the accounting concept, also the accounting cycle. And with it, at the end, you're able to answer these practice questions, which we'll be looking at in the next stream. Actually, we are going to discuss this. Okay, so check the link on my bio on YouTube. Click on it. It's going to take you to these. It is very essential because when you're looking at these accounts, when you are at a certain intermediate level, when you are looking at the financial statement, you should be able to directly know this is an asset, this is a liability, this is equity. Okay, and you need to understand these accounting concepts as well. Okay, so now let us go back to the question. So here we have capital and we have retained earnings. We have capital and retained earnings. So let's start with capital. The capital balance as of 31st December 2025 is 120,000. And we also have retained earnings. We also have retained earnings of 11,000. So remember, retained earnings as well is another component of equity. Retained earnings of 11,000. This is going to give us total equity. Total equity will be actually 130. Is it 131? Yes. 2 plus 3, 1. Okay, 131,000. Okay. Now let us look at now the third section, which is the liabilities. Okay. Let us look at the third section, which is the liabilities. Okay, so here we have, let us look at liabilities. The liabilities, again, let us structure them. Let us start with current liabilities. The current liabilities we have during the period are let us scroll down. We get first to where we have the liabilities. So we have account payable. This is a current liability. Why? Because it's something that is expected to be sorted within a period of 12 months. Within a period of 12 months, okay? Which we have a balance of 20,000. So we come here and include 20,000. Then we have bank loan is a non-current liability because it is something that is going to take a period of more than 12 months. Then we also have accrued expenses. Accrued expense as well is a current liability because it's something we expect to sort within a period of 12 months. So accrued expenses here, we have 4,000, okay? We have 4,000. Then here we are going to have the total current liabilities. The total current liabilities. We are going to have, did I miss something on just a second? So we already included prepaid insurance. Okay, that's fine. And yeah, so prepaid insurance is basically an asset. Okay, so here we have 24,000. Okay, then we continue. Well, let us look at the non-current liabilities. The non-current liabilities. This is basically liabilities. The liabilities that will take more than 1 year to settle, and in this case we have a bank loan. We have a bank loan of 40,000. Okay, we have a bank loan of 40,000. So do we have any other? No, we don't have any other liabilities. We have already cleared account payable. We have cleared bank loan and accrued expenses. Okay, so in this case, our total non-current is basically liabilities is basically 40,000. So here we have 40,000. We have 40,000. Okay, so then what is our total liabilities? Liabilities in total, we have this 40,000 plus the total current liabilities. So we are going to have, that is basically 64,000. Okay, because 64,000. So what is basically our total liabilities? Total liabilities plus equity is basically going to be 64,000 multiplied by, not multiplied, but added by 131,000, which is going to give us 195. Is this our assets? Yes, our assets were 195,000, and our liabilities plus equity is 195,000. So to ensure that to make sure to know if your statement of financial position is correct, remember you have to see that the assets, okay, which here we had 195,000, are equal to the liabilities plus equity. Okay, our liability is 64,000 and our equity is 131,000. When you sum 131,000 plus 64,000, you're going to get 195,000. So basically, that's how we are able to see that the assets of a business are equal to liabilities plus equity. Okay, so that is for today. That is the balance sheet. That's how we go about it. Okay, if you're here and you have not yet subscribed, kindly subscribe so that when we do any stream, you're able to join. Okay, you'll be notified to join. So subscribe if you're yet to subscribe. And next class, we're going to be looking at the statement of profit or loss. Okay.